Major sell-off on Wall Street sends stocks sharply lower, making one of the biggest intraday moves since the Liberation Day chaos of April. So stocks are making major move. 3% intraday reversal. Now, of course, earlier this morning we had non-farm payrolls report, which came in stronger than expected on the headline jobs created figure, but unemployment did tick up. We saw stocks initially rally after that news, but what we saw at 10:40 a.m. Eastern Standard Time, we saw a massive reversal. Now, people don't like the word crash. This is arguably a crash, at least on an intraday basis. This is a major move and is happening on high volume. We can see we tried to rally, but we are headed to test the day's lows and maybe even make new lows during the recording of this video. But a 3% intraday move is pretty massive. Again, you have to go all the way back to April to find a move that large. Now we are testing that low. We just broke it. Stocks are cratering. I know people don't like the word crash. This is definitely, something is definitely going on. So the purpose of this video, talk a little bit about my thoughts. Again, none of this was financial advice, of course, just education and the way that I am seeing things. So I want to kind of zoom out and set the stage. So here's the daily chart for the front month futures contract of the S&P 500. And we can see that we are testing this kind of support range around 66.10. We are breaking through that. So if stocks continue this sell-off, it is probably a pretty bearish signal. Now, one of the things that a lot of folks look at is the moving averages. So here are some moving averages, and the different colored lines are the different time periods. So 10-day moving average, because we're on the daily chart, 10-day moving average, 20-day moving average, 30-day moving average, 50-day, 100-day, and 200-day. As we can see, 100-day support, it was support. It is starting to fail. This 100-day moving average is a critical level that is watched by a lot of market participants. We are breaking pretty cleanly through that 100-day moving average. This is not a good sign for stocks and for risk assets writ large. We can see Bitcoin starting to have kind of a waterfall price action where it is just rolling over. And of course, this huge intraday swing, we gapped up and we were up, of course, on the live stream earlier today. I called out that I was getting some puts, that I was feeling pretty bearish. Wish I had held on to those puts. Hopefully someone may be watching the live stream that saw that and agreed with my view. Hopefully someone out there is still holding those puts, because they are up a lot. They are up like 10x, 11x from when I was buying them back here at open. But we are getting pressure to the upside on rates. So as we can see here, bonds were getting bid, rates were coming down, but they are starting, there's a bit of selling pressure starting to come in here as well. If we go to dollar yen, of course, the earlier video today on the yen carry trade, I believe that that is part of what is going on here. We have a strengthening of the dollar relative to the yen. Now, this is not pressuring the carry trade yet, but hear me out. My line of thinking goes, if dollar yen continues to rip higher, as we can see it has been, if you're a market participant with the yen carry trade on, right, where you're short the yen and then you bought US dollars and then you bought US tech stocks or the S&P 500 or US treasuries trying to pick up some positive carry, if you see dollar yen just ripping higher, would you not think, oh, Bank of Japan, who has a ton of dollar-denominated assets, over $1 trillion of dollar-denominated assets, Bank of Japan is probably going to intervene, and that would cause the yen to strengthen, right? I should close my trade now. I'm in pretty good profit. You know, the S&P is up to, whatever percent since I put the trade on. The dollar is clearly strengthened versus the yen, so I made money that direction. Might as well close the trade now, take some risk off the table. I think that that is probably what is driving some of this price action. Also, I would point to the fact that this is a very high frequency, about the 5-minute chart. We can see the top in the S&P 500 before it started that brutal sell-off was the top in dollar yen. Now, whether or not Bank of Japan is selling US dollar denominated assets yet, that is another question. It is late in the night for them. And so it's probably not generally the sort of price action you see when they just start dumping US dollar denominated assets to raise cash foreign intervention. Generally, this sort of kind of muted price action, you would see something more sharp in dollar yen. So I think that it's probably profit taking from people that have the yen carry trade on. They realize the yen is getting too weak and that the Bank of Japan and the Ministry of Finance will have to intervene, which again, what that means is buying yen. So putting downward pressure on dollar yen. If you're in profit and there's trillions of dollars in the yen carry trade, you might think about taking some profit. So I think that that's what's going on. Yes, unemployment rate did tick up, but again, the price action immediately after the release of the non-farm payrolls report was bullish, as we can see here. So I don't really think it has to do with non-farm payrolls. I would imagine if I had to give a cause, it would be people, the trillions of dollars in the yen carry trade that go, you know what? I'm in profit. The Bank of Japan is probably going to intervene. The yen is getting too weak. Dollar yen is ripping too high. They're probably going to intervene to defend their currency, and that could cause issues for my trade. I'm in some pretty good profit. I will just take it off the table. Now, remember that yen carry trade, they are long tech stocks. They're along the S&P 500, basically one and the same. They're long U.S. Treasuries. They are that yen carry trade is not limited to one particular asset. And the thing I would remind people here: implied correlations. Now, what we're looking at, many people know the VIX, the volatility index. What we're looking at with implied correlations, as you can see, very correlated to the VIX. Implied correlations show you the degree to which is the selling in the market, is the expectation of volatility evenly distributed, or is it just idiosyncratic, right? It's just NVIDIA that maybe is weak. When implied correlations spike, what that is indicating is that people are just selling everything. It's just a VAR shock, a value at risk shock, and there is systematic degrossing or deleveraging that occurs across the board. Not, oh, I want to sell this or I want to sell that. It is everything gets sold at 10% reduction of risk to bring your ratio into better balance. That is what happens when implied correlations are spiking. That indicates everything is just getting sold. Everything is getting dumped. It is not limited or concentrated in one particular asset. Implied correlation. So the index relative to the individual components. Now, VIX, volatility index, that shows the expected volatility through the options market 30 days in advance for the S&P 500. I would expect the VIX and the implied correlations to both move to 35 or 40. As we can see during the Liberation Day chaos, look at what VIX and implied correlations did. When they had that real vertical move here, that was the bottom in the equity market. We can see the VIX spiked and set a high shortly before implied correlation. So generally they move in tandem, but we could see that generally speaking, that corresponded to the bottom in the S&P 500, which we are looking at in green. So generally that's how it goes. VIX and implied correlations, they just go vertical. They go straight vertical. Right now we have implied correlations at 22, up 10%, and we have VIX at 27. I'm not going to say the percentage has increased. I know people hate that. So I would expect to see that sort of sharp move higher in implied correlations and the volatility index. But again, generally, those are good buying opportunities. If you're an options trader, generally when VIX is at 50, you are getting compensated more to sell volatility. And so there becomes a level on the VIX where volatility is so expensive that everyone rushes to sell volatility, putting a huge amount of downward pressure on volatility. And of course, then therefore bringing down volatility. So again, I would point to the fact that it did correlate to the top in dollar yen. Probably some degrossing, some yen carry traders, again, trillions of dollars in this trade. Some yen carry traders that are going, you know what? I've had a good run, made some money. It's time to take some chips off the table. Dollar is getting too strong, or put another way, the yen is getting too weak. Bank of Japan's going to intervene. I might as well take some profits now. I've looked across the wire. I have not seen any news going back to 10:40 a.m. Eastern Standard Time that would explain the sell-off off. Of course, non-farm payrolls again this morning, they beat stronger than expected, and you actually had the S&P 500 futures moving up. Of course, they are more than reversing that. I would watch VIX, watch implied correlations. I think we're close to a capitulatory sort of price action and movement here. Generally, in that capitulatory sort of price action, you get a spike in the volume, and so I would watch for a spike in volume. As we can see, if we go back to April, you can see that volume spiked significantly at the bottom. In that capitulatory price action, you get a huge volume spike. We have had volume elevated, selling pressure on elevated volume, and volume has been moving higher. And again, this is, has been a warning I've been making for the members for the past week or two. It kind of felt like something was coming. So generally, though, when the implied correlations and the VIX spike, generally that is the short-term bottom. So we'll watch to see if we can hold on to this kind of 6,600 level, which I would say is probably pretty significant. But again, the fact that we are breaking through the 100-day moving average, if we close below that today, to me, that would be pretty significant. So that moving average, of course, is a key level for a lot of market participants. I would continue to watch the 100-day VIX, implied correlations, and of course, finally, I would watch the volume. But I think that Bitcoin, of course, leading some of this weakness that we have seen in risk, Bitcoin selling off for the past month or two, I would imagine Bitcoin sets the bottom first. So generally in that capitulatory sort of price action, you get a huge volume spike, you get VIX and implied correlations going straight up. And of course, you get a bottom, a short-term bottom. I personally will be buying, not financial advice for anyone. This is all just educational, just my view on how I am seeing things. Of course, everyone do your own due diligence and consult a licensed financial advisor and all that kind of thing. Anyways, hopefully that was helpful. We'll keep an eye on it. If anything crazy happens in the next couple hours, I will definitely put out another update, and I will catch you in the next one.